Okay, Ryan, my partner Jared is gone, so I'm having to kind of step into the void during the one big beautiful bill progress, through Congress, and wanted to hop on here real quick and just give everyone a quick update and kind of have you walk through some of the things we've seen because, recently the Senate has kind of dropped their text of what they would like the one big beautiful bill to look like, right? Is that kind of where we're at right now?
That's right. Yeah. So a lot of things have stayed the same from the House's version, but there are some meaningful changes in the Senate's version, and yeah, that's what we're here to go over.
So I guess it's kind of a good news, bad news is that good news is a lot of the stuff that came out of the House bill, which generally speaking is a taxpayer friendly, is they're in agreement with. At least the Senate, side who drafted this is. Um, but some of the stuff that the sticking points, which is not surprising, state and local tax and some things like that, are probably going to drag this process on a little bit longer than if everyone was agreeable. Everybody's got to put their own stamp on it. So, before we kind of jump into changes or what we're seeing, really not a great idea of a timeline. We hear some people say late summer, Labor Day, you know, who knows? When it comes to Congress acting, it can be any time, right? I mean, you just don't
Right.
know when it happens.
Right. Yeah. I think the thing we can probably count on is their original goal of July 4th is probably gonna be delayed and pushed back. I mean, yeah, I saw the same thing. Labor Day was kind of the next date in mind.
Yeah. So hopefully it's far enough along and there's enough agreement that it can move through fairly quickly and Labor Day we can have some clarity. So let's jump in, man. Obviously the big one that's on everybody's mind, certainly from accountants, but anybody who's actively growing, investing in equipment or new locations or dental practice owners, bonus depreciation, man. House came in pretty favorable. What'd the Senate do on that side?
Yeah, yeah. So the House came in and bumped it up. It right now it was set to be 40% this year, and they bumped it up to 100%. And that was going to be for about 5 years. But the Senate came in and said, let's make that permanent. So they've made the 100% bonus depreciation on equipment and things a permanent provision in the tax code. So that's their version.
Okay, so they actually came back in a little bit heavier as far as the benefit of that 100% bonus depreciation. If memory serves, Ryan, there still is like a placed in service date that both agree on, like January 19th or 29th or somewhere in January, right? Where they say any assets after that are placed
Yeah.
in service after that.
Any assets after January 19th, that's the cutoff date.
Yeah, so that's a good thing. Who knows? There may shake out somewhere in between, but it feels pretty reasonable that 100% for some duration will be in play for 2025. Is that fair?
Yeah, yeah, certainly. Yep.
Okay, perfect. Okay, so last time I think you also hit on R&D when it came to the House, right? Talk to us what Senate has to say about R&D.
Yeah, yeah. So for the past roughly 3 years, R&D expenses have had to be amortized over 5 years. You couldn't immediately expense them. And the House said, let's fix that. So they allowed you to immediately expense them. But again, that was a temporary provision, roughly around 5 years long. And there was no way to go back and fix kind of what you had to amortize in the past.
What's done was done.
What's done was done. So the Senate has come in and tweaked both of those. Again, they've made the expensing immediate expensing a permanent provision, similar to what they
Okay.
did with bonus. And
Yep.
then they are going to work in some way to go back and correct the past 3 years and let you fully deduct those costs that you previously had to amortize. How that mechanical work, if it's an amended return or in the current year, we don't know yet. But it does look like there's a fix within this Senate's bill to go back and fix the prior 3 years.
And so one point of clarification there is we are talking to primarily dentists and most of ours are smaller taxpayers, but there is like a threshold where that is a provision that's allowable for smaller businesses, quote unquote, but it's still a
Yeah,
really high threshold, right?
it is. It's 30 million in gross receipts, so that they consider that a small taxpayer, which definitely covers most of our dental clients.
Almost all of them for sure.
Yeah,
So
yeah,
so that's definitely something that if you were in a situation where you claimed R&D credits in the past and had to amortize some of those expenses, that's something that if this passes, then with the Senate's provisions, then that's a nice retroactive provision that will allow to maybe recapture some of that money quicker.
Exactly. Yeah.
Great, great. Okay. Um, let's talk through pass-through entity tax. I think, Ryan, this is probably the biggest um, difference. I mean, this is the probably the one where they tend to have a lack of agreement on. So
Yeah.
what are we seeing there?
Yeah, so with the house, they removed the pass-through entity tax entirely for specified service trader businesses, which is dental clients and
Dentist,
dental
yeah.
business. Yeah, yeah. And so what the Senate has done is they've put that back in play for service businesses. However,
Okay, that's
there's going
good.
to be a cap on the amount that you can deduct as a specified service trader business. So it's back, but there's a cap to it, which is new.
So it's kind of a good and bad. I mean,
Right.
it's not exactly what we wanted, which was a complete scrapping of that provision, which was just I mean, we're accountants who are specified service trader businesses, but it just seemed like an extremely punitive provision for
Yeah.
service trader businesses to remove that ability. Um, you know that I didn't understand that one, just to be completely honest. So it's good to see that was removed. Does kind of throw a bone to the house to cap it. Uh, kind of a strange mathematical calculation. We'll see have to see how it plays out. But I mean, that's
Yeah.
all going to be negotiated, and we'll see where we shake out there. But hopefully, we allow our dentist to deduct some of that pass-through entity tax. And
Yeah.
if the Senate had its way, there would be some there.
Yeah. Exactly.
While we're on there, why don't we kind of talk through, what that's designed to do, which is to kind of work around the SALT limitation, state and local tax limitations that was there, Tax Cuts and Jobs Act, 10,000 bucks, was what it was at. What did the House say and what did the Senate say on that?
Yeah, so this is one of the bigger sticking points between the House and the Senate. The House wanted to increase it up to 40,000 from the current 10,000 that it's at, and the Senate has come back and put it back down at the 10,000. But it's my understanding that that's more of a negotiation starting point. It'll probably land somewhere in between the 10 and the 40, but
Okay.
that's something they'll have to work out.
Yeah, that's going to be probably the thing that drags this thing out, the longest. It sounds like to me. So let's kind of bring it home. The last thing that we're going to talk through is the QBI deduction, the 20%. A lot of our dentists kind of completely phase out of that. And so there was some movement, I think, in the House to maybe raise that up and so walk us through kind of where we're at as far as QBI if our dental uh, uh, clients do qualify for that. A lot of them don't, but if they do.
Yeah, yeah. So currently it's a 20% deduction on your business income and it phases out for specified service trades or businesses. Again, there's that phrase again where they
Yeah.
kind of single dentists out. It phases out right around $400,000 currently. And what the House did was they bumped it up to 23% from 20%, and then they kind
Okay.
of tweaked with some of the phase outs to where it could have been a little bit higher income threshold. The Senate has bumped it back down to its original 20%, so they got rid of the increase to 23%, and then there could be some marginal increases on that income limitation for specified service trader businesses still.
Okay. So that was one of the give and the takes. The Senate was more generous on some, but this is one where they're ratcheting it back to 20. And in all honesty, that's probably realistically, where it shakes out, probably because that's status quo. That's
Yeah,
keeping it where it was.
yep.
Yep. Okay. Ryan, there was a ton of other little things like, individual tax rates, tax and overtime stuff that really maybe doesn't apply. Some of it, but the tax rates and stuff certainly do. Any major variances between the Senate and the House on that stuff?
No, the Senate kind of kept all that stuff the same. So it's basically making permanent the tax cuts back in 2017, and the Senate just went right along with what the House did on that.
So I guess if you look at it, and again, there's other things in here, guys. We're trying to focus on things that we tend to see in our client base, things that are most impactful. There's probably other little things that will change that we're not covering here, but these are the 80/20 rule. These are the big ticket things that could affect you. But outside of that, for the most part, it seems to be somewhat of a consensus between the House and the Senate on a lot of the bill. So these are just some areas that have a little bit of differences, and hopefully we can see some negotiation, Ryan, and maybe some movement and try to get some clarity. Because at the end of the day, as accountants, that's all we want, right? Is clarity on the rules. There's nothing worse than the game being over when you finally learn what the rules were, right?
Right, right. And a lot of this stuff could affect 2025. So we're not just talking about future years, we're talking about the current tax
This
year.
current year.
Yeah.
Absolutely. Anything else, man?
No, I think that covers it.
Okay. Great job, Brian.
All right. Thanks, Bill.
You bet, man.